In this video, we will discuss 5 predictions made by Dr. Michael Burry about the US economy, stock market, and financial system for 2023. But before going into the details, let me introduce Michael Burry to you because knowing his profile will make things easier to understand. Michael Burry is not your regular doom and gloom artist. All of his predictions are backed by 100% research conducted rigorously. Listen carefully. Michael Burry is a famed American investor and hedge fund manager who rose to fame after his successful bets against the subprime mortgage market during the 2008 financial crisis. Born in 1971 in California, Burry grew up in a middle-class family and showed an early aptitude for medical, mathematics, and finance. After completing his studies, Burry worked for several years as a neurologist before deciding to switch careers and pursue a career in finance. He enrolled in the MBA program at Vanderbilt and subsequently worked as a stock research analyst for several firms, including Zion Capital and Legg Mason. Burry gained national attention in 2008 when it was revealed that he had made a huge profit by betting against the subprime mortgage market. He had recognized early on that the housing bubble was unsustainable and had taken out credit default swaps that would pay off if the market collapsed. When the market did indeed collapse, Burry's hedge fund, Zion Capital, made a profit of over $700 million. Burry's success in the subprime market bought him widespread recognition and led to a book and a movie about his experiences. He also gained a reputation as a contrarian investor who was willing to make bold bets against the consensus. In addition to his investments in the subprime market, Burry has also made successful bets on several companies. Despite his successes, Burry has been a controversial figure in the investment world. Some critics have accused him of being too pessimistic and of ignoring the potential for growth in certain markets. Others have questioned his methods and his willingness to take on large amounts of risk. Despite the controversy, Michael Burry remains a respected and influential figure in the world of finance. His success in the subprime market has made him a legend in the industry, and his insights into the current state of the economy and the stock market are closely watched by investors and analysts alike. Here are 5 of Michael Burry's latest 2023 predictions about the US economy, the stock market, and the banking system. According to Michael, another major financial crisis is on the horizon. Burry has been warning for several weeks that another 2008-style financial crisis is looming, and he recently reiterated this prediction in a series of tweets. He has expressed concern about the current state of the stock market, the housing market, and the banking system, all of which he believes are overvalued and vulnerable to a major downturn. Burry has expressed concern about the high levels of debt in the U.S. economy, which he believes are unsustainable and could trigger a major crisis. He has pointed to the rising levels of corporate and government debt, as well as the growing number of zombie companies, i.e., companies that are only able to service their debt but not pay it down, as evidence of this. Burry has also expressed concern about the current state of the stock market, which he believes is again overvalued and driven by speculation rather than fundamentals. He has warned that the popular buy the dip mentality is based on false assumptions about the resiliency of the market and that it will eventually lead to a major correction. In addition, Burry has expressed concern about the state of the housing market, particularly in the United States. He believes that housing prices are overinflated and that many homeowners are still carrying significant levels of debt. He has warned that a housing market downturn could trigger a wave of defaults that would ripple through the banking system and the wider economy. Finally, Burry has expressed concern about the vulnerability of the banking system, which he believes is over-leveraged and undercapitalized. He has warned that a wave of bank failures could trigger a major crisis similar to the 2008 financial crisis. Overall, Burry's prediction that another major financial crisis is on the horizon is based on his belief that the global economy, the stock market, the housing market, and the banking system are all in precarious positions. He has warned that investors need to be cautious and that the risks of a major downturn are higher than many people realize. The second prediction of Michael Burry is that inflation will become entrenched in the economy. Burry has been warning about inflation for several years, and recent data has confirmed that inflation is indeed on the rise, and it's showing a trend of stickiness. He believes that this trend will continue, driven by a combination of factors, including government money printing and spending, labor issues, and rising commodity prices of essential goods. Burry has also expressed concern about the impact of rising inflation on consumers, particularly those on salaries which are not being compensated for the full impact of inflation. The third prediction of Michael Burry is that the stock market will suffer another 2022-style leg downward. Michael Burry has been a vocal critic of the so-called buy the dip strategy, which is a popular investment approach that involves buying stocks or other assets when they experience a temporary decline in price, with the expectation that they will rebound in the future. Burry has argued that the buy the dip strategy is based on a flawed assumption that markets are always rational and efficient, and that declines in asset prices are always temporary and will eventually be corrected by market forces. In his view, this assumption is dangerous because it can lead investors to make decisions based on short-term fluctuations in asset prices, rather than focusing on the underlying fundamentals of the companies or assets they are investing in. Burry has also pointed to the risks of buying the dip in an environment of increasing market volatility and uncertainty, such as the one that exists today. He has warned that investors who rely on this strategy may be caught off guard by sudden and sharp market declines, and may find themselves unable to exit their positions at a favorable price. In addition, Burry has criticized the buy the dip strategy as a form of speculation rather than investment. He argues that investors who engage in this strategy are not focused on the long-term growth prospects of the companies they are investing in, but rather on short-term price movements and market sentiment. Overall, Michael Burry's criticism of the buy the dip strategy is based on his belief that investors should focus on the underlying fundamentals of the companies or assets they're investing in, rather than short-term price movements or market sentiment. He has argued that investors who rely on this strategy may be exposing themselves to unnecessary risks, and that a more disciplined and value-based approach to investing is likely to be more successful in the long run. The fourth prediction of Michael Burry is already coming true. Burry said that the banking system is vulnerable to shocks. Burry has expressed concern about the state of the banking system, which he believes is over-leveraged and vulnerable to shocks. He has warned that a wave of bank failures could trigger a major crisis similar to the 2008 financial crisis. One of the key vulnerabilities that Burry has identified is the high levels of debt, high interest rates, and leverage that exist in the banking system. He has argued that this debt can amplify risks and create systemic vulnerabilities, particularly in the event of a sharp economic downturn or financial shock. And finally, the fifth prediction of Michael Burry is that alternative assets will outperform traditional investments. Burry has long been a proponent of alternative assets such as gold, precious metals, and farmland, which he believes offer a hedge against inflation and other economic risks. He has recently reiterated his belief that these assets will outperform traditional investments in the years to come, as investors seek to protect their portfolios from volatility and uncertainty. This view is based on his analysis of the underlying factors driving the current market environment, and his assessment of the relative strengths and weaknesses of different asset classes. One of the key drivers of Burry's prediction is his expectation of rising real inflation. He has argued that the combination of fraught monetary policy, government policies, and geopolitical disruptions will lead to a significant increase in prices across a range of goods and services. In this environment, Burry has suggested that assets such as gold and other precious metals may provide a hedge against inflation and outperform traditional investments. Burry has also pointed to the potential for disruption in traditional financial markets. He has argued that the increasing dominance of passive investing strategies and the proliferation of complex financial instruments have created a market environment that is vulnerable to shocks and volatility. In this context, Burry has suggested that alternative assets may provide a more secure and stable investment option for some investors. In addition, Burry has highlighted the potential for technological disruption to drive growth in certain alternative asset classes. He has pointed to the rapid adoption of blockchain technology and the potential for cryptocurrencies to revolutionize the financial system as evidence of the potential for growth and value creation in these areas. It's also important to keep in mind that Michael Burry is not a proponent of Bitcoin. Overall, then, Michael Burry's prediction that alternative assets will outperform traditional investments is based on his analysis of the underlying factors driving the current market environment and his assessment of the relative strengths and weaknesses of different asset classes. While there are certainly risks and uncertainties associated with investing in alternative assets, Burry's view is that these assets may offer a compelling investment opportunity for those who are willing to take on some degree of risk and volatility. Time for the important announcement. Now you can join our community of 5,000 plus members and active stock market investors and receive the latest timely stock market and economy related updates, like what stocks to buy and what stocks to ignore or sell to save your portfolios. Economy and stock market related commentary and alerts are shared regularly on a weekly basis. You can also chat with me during market hours and ask me any questions. Join our community on Discord through Patreon. Upon becoming a member, you'll be able to enjoy some great perks. For example, you'll be able to receive proper buying and selling alerts for a wide range of potential stocks. We'll also share tips and alerts for option trading. You'll receive a weekly guide for stocks performance and updates with technical analysis. You'll be able to chat with over 5,000 like-minded members all the time. And you'll also be able to chat with me during market hours. I'd be delighted if you could join us. The link to join is given in the description below. Thanks, and see you on the other side.